Good morning, everyone, and very much welcome to another Flash Friday. Very much looking forward to speaking with you again today and taking you through the developments in fintech and the news. And as always, I bring a distinguished guest. And today it's none less than Erwin Dreuning, the CEO of Stater. Good morning, Erwin.
Good morning, Don. Good morning, all.
Yeah, very much welcome to the show. Very much looking forward to having a talk with you and diving in deeper into what we see happening, especially from the perspective of the mortgage market and fintech. But just for everyone who's just tuning in on the social channels or and watching the live stream, please let us know in your comments if you have any questions or remarks that we more than happily take into the conversation during this half hour that we have with you. We're very much looking forward to that interaction. But maybe let's start with you, Erwin. What are you up to with Stater? What's going on?
Well, first of all, thanks for inviting me, Don, and it's great to be part of this show this morning. For those who don't know me, Erwin Dreuning, I'm the CEO of Stater, a mortgage service provider in the Netherlands, Belgium, and Germany, and we see quite some developments which are really related to fintech. We all see the developments in financial services where traditional banks are more and more forced to focus on their core business and have quite some legacy from the past which they need to manage. And on each part of their traditional banking system, you see more and more new players, niche players coming into the market. And we provide services for the traditional banks as well as the niche players in the mortgage market in those three countries I mentioned.
Yeah, can you explain a little bit about that, right? So because I think that's sort of the backbone of mortgages that you're supplying. How does that work? So basically, where do people enter your service, basically?
Yeah, I think that's one of the big misunderstandings in what we do, and there we have our own reputational part to solve. But also when you look at the developments in the market, about 10 years ago when I started at Stater, you can really saw some parts of the mortgage market. You had the front office where people are actually buying a house. You had the mid office where people are realizing their mortgage, and then you had the servicing where it was managed for 30 years, and only once in 10 years everybody looked at their mortgage because you had to renew your interest rate, for example.
Yep.
Over the years that really changed. Mortgage products really became a proactive product where consumers every day and more times a day want to be involved. They want to do a payment, they want to do a building deposit. So you see the horizontal chain becoming more a vertical chain. And it also did something with the mortgage service providing business, not only for Stater, but in general, where you see more and more are moving to the front end of the mortgage chain, and the CX and UX are becoming much more important than it was 10 years ago. So you see the whole change necessary in the way of working in mortgage service providers, where in the past it really was a linear agreement we had with the banks and the banks with the consumers. We now more in a triangle where we on one side have the consumer and on the other side we have the banks.
But should I then see it as that increasingly the distributors become more the label under which the product is being served, but basically all the capabilities are basically in-house on your end?
Yeah, basically we have all the capabilities in-house, and you see indeed, you see the originate to distribute model is a very developed model in the Netherlands. Meanwhile, that started in 2012, 2013, and now it's a developed model where you only have a kind of coordinated role as an originator, where you have a funder on one hand and you have maybe an external reporting line, and you have a service provider who takes care of everything to just ensure the whole process. And like I said, that's not only with Stater, but that's a complete change in the market where all companies do that.
Yeah, and so how does the funding of these portfolios then go? Is that something that's also on your plate, or is that done usually with in the front office still?
Well, if you really look at the funding to originate the mortgages, that's a responsibility of the originate to distribute party. But what you do see is that all of them, and that's I think one of the things that are really important for us. What you do see is that when there is a funder, a pension fund, or a foreign investor is interested to start on a mortgage market, they really want to be sure that the service provider has got the right licenses, had got the right assurance, had got the right risk framework, all those kind of things. So there we come in inside, where you see that as soon as a funder is interested in joining either which originator, they always want to visit Stater or want to visit a competitor of Stater, just to be ensured that what's happening behind the front end, behind just the label, is also right, is from reporting perspective correct, is the risk framework state of the art, is the assurance well taken care of. So there we definitely have a supporting role to the originator.
Yep. Okay. Cool. So I think it's really interesting because also there, I think you have of course your history that you take to a part with you. You basically started out as a subsidiary of a bank, right, of ABN AMRO. Now you're part of an IT company, Infosys, that I think gives you much more tech capabilities. How do you see the transition, and where do you see it going from here? Basically, do you have the ambition to behave like a fintech, basically?
Well, I think we need to behave like a fintech. I think I always say to my employees, and when I speak to people, I know somewhere in the Netherlands there's a youngster for 16, 17 years old with all kind of blisters on his face, just finding out something that destroys our business model. And I want to have that guy in my team. So we're always looking at ways to cannibalize our own business model. So definitely we are, especially when you look at the front end or when you look at the mid end, we are definitely moving to a fintech. On the other hand, we also have to be very honest to each other that from our past and from our cultural perspective, it's the back end is our core of our services, is the core of our revenues. And finding that balance to being a fintech on the front end, and on the other hand, be a sustainable provider on the back end, that's the challenge we're currently in. And therefore, it's for us necessary to move into the opportunity to be a fintech with short reporting lines or no reporting lines at all, innovate, investigate, do things, accept things can go wrong, but on the other hand, also ensure that you are capable of sourcing 260, 270 billion of assets of the current clients we have.
Yeah, no, I do understand that, but I think it's at the same time it's also quite a challenging environment, because I think people are expecting the whole administrative process to go completely smoothless and instantaneously. And I think if you look at the mortgage market, it's one of the places where you can still get the old-fashioned treatment, I would say, with tons of paperwork and a lengthy process. Why is that?
Well, I think that's changing. I fully agree with what you say that there are situations where I recently bought a house, and when I saw how much paper I get for the offer of the banks, I fully agree with you. But it is changing very rapidly. Basically, you see three things happening in the mortgage market, and not only in the mortgage but in the financial market. But given my background, I will focus on the mortgage market. There are three major developments. First of all, you see consumer behavior changing. Consumer behavior is changing over the years, and it started in more fiscal things, and that's moving into financial products as well. The consumer don't accept that they have to wait for a week for an offer for a mortgage. They don't accept they have to wait for a week or 2 weeks for an insurance or whatever. If they transfer money from A to B, it needs to be done instantly, and there need to be all kind of checks and balances. On the other hand, we have highly increasing law and regulations. If you look at law and regulations in the Netherlands, and I want to spread it a little bit more in continental Europe, I really believe in the development of a continental European financial market / mortgage market. You see that the European Central Bank are more and more putting out law and regulations on one hand to protect the consumer, which is, I think, a very good thing, and on the other hand, much more responsibilities for the originators, and that's basically that can be an opposite of the consumer behavior where they want more and quicker and.
But do you think it's proportional? Basically, if you talk about these new rules that you have to incorporate in your processes, all the checks and balances, do you feel it's still proportional, or are we also getting out of line there, perhaps?
I can understand what's happening there. So I think to some extent, some of the things that say, okay, well, that's quite a lot. On the other end, I also think that we are here in an environment and we are working with things which are that close to a consumer that you have to be very careful. One of the things for example, which a lot of people think that are that we're not very enthusiastic of, is the responsibility of the external, the third party service provider, the responsibility to be completely compliant to the law and regulation of the bank. I think that's really a good idea. That's something that really is a big issue for us. But I really think that's necessary to have, as a European Central Bank, the overview over the whole chain. So I think that's a good thing. The same goes for the privacy law and regulations. And of course, it's easy to say, yeah, but we have Facebook and we have Google. That's all true. But now we're talking about really specific information, about financial information, where I really think that it's good that we have an external supervisor to look after that. Yeah, and I think over the years that. Yeah, maybe we are now a little bit more to the strict side. That will come back a little bit as well. I think in the past things were too loosened, and now maybe they are getting a little bit.
It's always a pendulum, indeed. So I think, do you also see, because I think that's also because some of these challenges are relatively new. I think we're also still not completely up to speed with all the solutions to actually smoothen out the process, right? Because I think that's also what you need. I mean, if the challenges are there in the market for a longer period, they will get solved. And the processes will get easier. Is that something you're seeing happening as well?
Yeah, absolutely. I think financial services needs to reinvent themselves time after time. And I've been working now in financial services for 30 years, and that happened several times. But it's getting quicker and quicker and quicker. Yep. And that's mainly because of the fintech, and that's mainly because of the opportunity technology gives us. One side, on the other side, is the change in consumer behavior. Yep. What interesting is in that perspective, if you look at other countries in Europe, they are far behind the Netherlands in certain areas. If you look at service providing, if you look at financial products, of course we have challenger banks in let's say Germany, or maybe small ones in Belgium. But from an overall perspective, the Netherlands is front runner in Europe. So we will also see that what we saw over the last 5 to 7 years in the Netherlands, we will probably see the same happening in Germany, Belgium, Austria. I have some other thoughts about, for example, France, but we will see the rest of Europe.
Do you have any ambitions in that direction, by the way, to actually also expand status activities in those markets?
Well, I think it's necessary. I think if you look at the whole financial environment in Europe, we are moving from a country financial environment into a pan-European continental financial environment.
Yeah, and it's slow, but we're working on it. Yes.
And there we need to join as well. And for example, that we are really taking steps there. It might be very well possible that before the end of the year, we have a German as well as a Belgian bank on our Dutch platform to provide mortgage services.
Yeah,
that haven't been seen in the mortgage market in the past, but now it's actually almost there, and that will just increase and increase and increase.
Yeah. No, I think that's really interesting indeed. And let's say I think from that perspective, a pan-European market would be very beneficial. Although indeed. You see that the mortgage markets are still very much different. As you know, for example, one of the Dutch characteristics is that indeed you can still get 100% loan-to-value mortgage. While in other countries, of course, you wouldn't go beyond 70 or 80%. So that's already a big difference, I would assume. Also, already from an investor perspective, that looks much different.
Yeah, that's on the other end, you see several things happening. You see that whole law regulation, more and more pan-European law regulation becoming. And for example, if you look at the valuation of your house, we had all kind of different systems. In Spain, it was mandatory to have a physical valuation of your house when you bought a house. In the Netherlands, it was used, but you can also use the last few years the digital way, especially when you're going to when you are redecorating your house. Nowadays, from July 1st, there's a pan-European rule which applies to all countries, where Spain as well as the Netherlands need to apply to. So there you see already moving it into that more generic way of working. And then of course, we will have, especially in the legacy, there are definitely differences, and they will continue for years and years. But with all the changes you see that legacy is not only getting less because of time, but also because of changes. If you look what the traditional banks last year, how big the change was from mortgages, existing mortgages, to new products, new types of work, and they're all more and moving into a more commodity as a product from a servicing perspective. And then you can really make the difference. Then you can only really be unique on the front end, and there you need the fintech capabilities to become unique on the front end.
Because but that's already the case, right? Because I think indeed, let's say contract-wise, the mortgages are already pretty uniform. So the product by itself is not discriminating at all. I would say it's all about a bit of packaging, marketing, and the servicing of it that makes a difference.
Absolutely. It's. I think that mortgage servicing is just a commodity. It's like water. It's like electricity. It's just ensure that you have an STP digital process from A to Z. The differentiation there is very, very limited. The differentiation is on other things, and that's in customer CX UX. I think that's a huge differentiator, but not in the product specs. They are getting more and more into a very small stream of difference. So you're absolutely right, Don.
And so, what are the biggest challenges there? And in any case, some things that I'm thinking about is, for example, the credit information, right? So basically, the profile of the customer, that's still a pile of paper that's basically get pushed around to actually get access to a mortgage. How do you see that change, for example? Do you see that we're actually making good steps there to actually unlock data sources differently, so we can avoid consumers having to really dive into the shoe boxes to get all the information out?
I definitely think that's a huge change. We in the Netherlands already see to a certain extent. If you go for a mortgage, a lot of the information is already digital, accessible at the tax authorities or at the credit authorities or whatever. So you see that happening. I think we should be careful there that in other parts of Europe that's absolutely not common yet. If you look at, for example, Belgium, or if you look at Germany, or look at France, the step from what you say, from a more digital, holistic approach as an ecosystem from where they currently are is a tremendous step. That's from the Stone Age into the 20th century. Where for the Netherlands, we are already making quite some steps there. So we are very near that, and we are. There's a lot of investments going on there, not only at Staten but in the market, just to ensure that we can do that. Yeah. But before, in other parts of Europe, that's completely different.
I know we might be spoiled there, Erwin, but that doesn't mean that we also can actually see through all kinds of other comparable processes that it can be still much better than what we're experiencing at the moment, right?
But that's what I see as a kind of learning curve for the originators in Netherlands. But what I also see is that some of the originators are using the Netherlands as a kind of try out for the rest of Europe. In the Netherlands, we have a very mature, well-developed servicing market, which is necessary if you are just an originator and work in a coordinated situation. If you want to start in, for example, Spain, or if you want to start in Italy, or that's not possible because there is not a mature outsourcing servicing providing market. So you see two things happening. First of all, you see in the Netherlands a lot of parties are looking at how things are getting better in not only in financial services but also in other areas, and what can we learn in the Netherlands, because the competition is really tough. And on the other hand, you see also that people are building up a learning curve in the Netherlands to expand it to other countries, and that's a very interesting dynamic.
No, exactly. I think that's really interesting to see that. And so let's say there's two things, right? So we have basically the credit file that all the data that you need to actually be able to make a decision. Then I actually see that very often also sort of the whole checking process also takes quite a while, right? So where do you see that we're going there? Is it about the decision making? Is it about the whole compliance of having all the files complete, or what are the biggest challenges that you see on that end? And is there something that we really need to look out for that's going to improve?
Ooh, that's difficult. That's difficult one, Don. I think, and that relates to the law and regulation. I think ensuring that you have that your process is compliant and that you comply to law and regulations is the fundament of everything. That needs to be completely 100% correct. And not only from a reputational perspective, we all know how soon you can come in the social media, but also from the penalties you can get from the external stakeholders. On the other hand, I also think it's absolutely necessary to really ensure that customer and user experience, which is really high end. If you are not able to make that completely paperless, if you're not able to really make that a digital ecosystem where you use each other's strength, you will lose on the front end from your competitors, because that's where you can make the difference. Like we just said, the difference isn't in the product. That's limited. You can see, if you look at the interest rate list, those who have the lowest interest rates are getting the highest market share. So the difference there in the products, it is there, but it is limited. And it's getting, in my opinion, the upcoming years more and more limited. So you need to have.
Do you see a potential of, let's say, one of the things that I'm always interested in, because I believe it actually will reduce a lot of financial stress, is actually being able to understand your credit worthiness as a consumer, and actually knowing your credit limits in advance of making any kind of financial decision. I know that this is something where, for example, the Dutch Financial Market Authority is not in favor of, because they believe that if you know what you can spend, you will spend it. I don't believe that, because I do really believe that people that are now basically are looking for a house without actually knowing for sure that they will be able to afford it, I think is bringing much more stress, and it's unhealthy, I think, for a lot of people in this process. What's your view on that?
Well, I think I'm more on your thoughts than on that the external supervisor. Although I do understand what they say, but I think the technology is just providing this knowledge. But there's something else which is in my view important there, and that's that if you have a kind of overall view on financial services, it will also and your credibility and the possibility here, it will also give you more comfort, and it will also prevent that you are doing that you're using that you're using the whole spectrum. For example, the consumer credit. A few years ago, consumer credits, the tax deduction of consumer credits went away. There was completely no interest anymore in consumer credit. A few years ago, in mortgages, we were lowering the loan to value to 100%, or even in sometimes not even. And what you saw happening, people are starting to get consumer credit, taking consumer credits again just to get to the 100%. And with the low interest rate, the advantages of the tax deductibility was that low that it doesn't really matter much. If you have a kind of overall credibility view and impact view, I think you will prevent people for taking decisions which now seems to be rather okay, where in future, because you have a lot of combinations made, there might even be difficult. But I also understand that the authorities say, be careful that you're not get into a kind of self-fulfilling prophecy. Oh, it can be done, so I will do it. But consumers are getting more and more. The consumer behavior is changing. They get more and more knowledge about what is possible or isn't possible.
No, exactly. I think so too, right? So I do believe as well that indeed we should make sure, because one of the things is, of course, that for people it's very hard to assess their overall financial picture and figure out, what's affordable and what's wise, and what kind of risks do I run based on the decisions that I make. And I think that's where there's still a lot of education to be done, and that's also where I see that technology is stepping in to make life easier for consumers, to give them a better perspective on their own finances. And if you have that whole view, you also are less dependent on, what the advisor tells you that's wise to do, with only having one product in mind, for example.
Yeah, and to add on that, also, when the current extreme tension on the housing market, which in my opinion won't really disappear the upcoming years, because we just have simply we have a shortage on houses.
Yeah.
Makes that people also taking risks currently based on assumptions, which you can better just have a thought fundament and have some facts instead of For my current house, I think I can blah blah. And so I'm more on your line there. Yeah.
No, I think so too, and I think that. But I'm curious how that will evolve indeed, because it's a really challenging housing market, and let's say the mortgage market is therefore also quite overheated. I would say. And do you think also that the product by itself will be? I think you indicated already that you see it becoming much more of a current financial product rather than something that you agree upon for the next 30 years, and then after 30 years you look at it again. Do you see more interaction there? Because I think there's also one of the parts of the pension debate, right? So there's always discussions as well on whether you should be able to consume your pension at an earlier date if you want to take a sabbatical, for example. At the same time, people are also saying like, okay, but there's also much value in houses stored, which is that value and how can that be used? Do you mingle in that kind of discussions?
Yeah, it's something that I absolutely where we absolutely look into, and I'm not in favor of say, okay, there's a lot of money in your house, so because that's all, in my opinion, paper money. I think it's very important till a certain extent.
So is your pension to a large extent, Erwin.
And absolutely, and therefore, I think it's quite risky to think, okay, I can use it partly or whatever, I'll make it up. On the other hand, I think we should also be careful in being too strict. For example, the whole discussion about mortgages without paying back. I think.
Yeah.
Sorry.
Yeah, the ones without installments, basically the bullet loans. Yeah.
Yeah. We are talking that you need to install everything before the end of the mortgage. On the other hand, you can also say, yeah, but if you look at in general shortage of houses, you have a regular normal house. What's the issue of maybe 20 or 30% not paying off in the end of the mortgage? So there's a lot of parts in the discussion, but I think the most important part thing, and that's also related to our business, your business, my business, is that you change the product, mortgages, but also pensions. It will change from a reactive governmental taking care of product into a consumer responsibility. That change will see that, and we saw it for mortgages already. That will be more. We will see it for pensions. I'm sure where, of course, we have the social partners, so it is a little bit more difficult. But I
still have some difficulty there, because I do see that policymakers and also indeed, for example, unions are really much opposed to consumers having that own responsibility. Most parties are relatively paternalistic in their approach and say like, no, we should prevent people from making mistakes, which I think is always the wrong idea, because I think people should be allowed to make mistakes. But they should be well informed and they should be nudged to do the right thing, basically.
Yeah, but Don, to be honest, how many pensions we still have in the Netherlands on defined benefits? If you compare that to 10 years ago, it's all defined contribution now. So that's to be honest, then you already have your own responsibility.
No, of course. But for example, about people wanting to, for example, consume part of their pension at an earlier date. Or basically really take ownership of the product by itself, instead of being forced into a product that they have no control of whatsoever. Yeah, then it's not so strange that they don't care about the product and they are completely uninformed about it. Yeah.
Well, that's true, and I think that's not a black and white discussion. I can really understand that as a government you have the responsibility to at least inform or take care of maybe people who have a very limited pension. So there is an obligation there to ensure that you also take care of them, because it doesn't help anybody if they are getting into issues. On the other hand, there are a number of people who are just sitting on a tremendous amount of money in their pension fund, so I think the truth is there in the middle. I think you should really be careful and really look after a certain group in the organization or till a certain amount. Like, for example, a few years ago, where the pension max was from unlimited to 100, and now with indexation it's about 108 or so, somewhere 108k. No, I think that can lower till a certain extent, but you should have a kind of fundament, because that's also the fundament of the social system we have in the Netherlands.
No, I agree with that. So I think we should prevent people from going broke in total, but and basically being able to sustain themselves up to a certain level. But beyond that, there should be a large self-influence, I think, on that as well. Also, because otherwise people just don't care, right? Then they're not involved at all, and they don't become smarter at that as well. We almost have to wrap it up, Erwin. So I just want to ask you one more question. That's what is the thing that excites you the most now? If you look forward into where your industry is going, what are you looking out for?
The real development of the pan-European market and the interest of the new type of origination.
Okay, cool. Yeah, I think we're going to follow that for sure, and look after what's going to happen with Stater, with the mortgage market, and so for everyone who's interested in actually learning more about what's going on in the European mortgage market, would like to know more about the Dutch market, for example, please let us know. We're more than happy to discuss it with you as well, and can of course also refer you to Erwin if you have further questions for Stater. I'd like to thank you very much, Erwin. It was great to have this talk with you to explore the mortgage market and everything around it today. So thanks.
Thank you very much, Don. Thanks for inviting me. I thought it was a great discussion. It was a pleasure seeing you.
Yeah, it was a lot of fun. So thanks for sharing your insights, and for everyone who joined, thank you for listening in. And we're very much looking forward to speaking with you again next week. Enjoy your day. Enjoy your weekend. See you next time.
Thanks all. Bye bye.